Can technology really change banks' future? Can technology change a bank or banks in the aggregate? That's a question that's kind of like arresting. You have to suspend disbelief and believe that there's a future for banks at first in order to answer the question, else it's kind of a moot point. So I'd like to start with a show of hands. Who would answer yes? Technology will change the bank's future. You guys are techno-utopians. Who is going to answer no? Who's with me? Yes. Who else? Who wants to be in the right? Oh, a banker. All right, okay. So everyone believes in technology here. That's very, very sad state of affairs. Let's first start with everyone introducing themselves and what they do very quickly, and then we'll launch into our conversation. Simon, you want to kick us off?
Yeah, very good. I think you said 60 seconds, right?
Yeah.
Okay, so 60 seconds. My name's Simon Paris. I'm the CEO of Finastra. Finastra is one of the world's largest software and technology providers to financial institutions. Many of them are banks. We do three things. The first is our software applications business. That's around 7,000 people, 1.6 billion of revenue. And we focus on corporate banking, payments, treasury, capital markets, retail, and digital. The second thing we do is marketplaces, which is essentially the monetization of data, either in two-sided or multi-sided networks, financial messaging, confirmation matching, mortgage trading. That's another $120 million business. And the third thing we do, which is perhaps the most exciting, is the platformification of all of our applications to invite the world's fintechs to innovate on top of those workflows, core business processes, data sets. 60 seconds. Done.
Yeah, good afternoon, everyone. My name is Bart Leurs, within the board of Rabobank, responsible for digital transformation and innovation. Very quickly, Rabobank is a worldwide bank. We have 41,000 employees. In the Netherlands, we are a universal bank, and internationally, we're a specialized food and agri bank.
Hi, guys. Ricky Knox. I'm CEO and founder of Tandem Bank. It's my fourth fintech startup, and Tandem is a fully licensed UK bank. We're approaching 1 million users, and we're just expanding into Hong Kong.
Hi, everyone. I am Anish. I'm the founder of Open. We are an SME-focused neobank based out of India. We have 350,000 small businesses. We're adding around 50,000 new businesses every month, processing over $10 billion of analyzed transactions, and managing over $500 million in deposits.
All right. I'm going to start with an assumption. I'm going to posit something, and the entire room is going to be against me, except from this lady, who just raised their hand with me. And I'm going to pick on Ricky. You ready?
I'm ready.
All right. So here is my assumption, a grounded assumption, right? Everything good that has happened with Tandem has to do with either legislative and regulatory fiat, allowing for startup banks to grow in the UK, or as a result of culture that you've built, human beings that you've recruited to build what you've built. Nothing that you've done that is good is the result of technology. I'll even go one step further. Anything that is technology-related has created headaches when you've grown Tandem. Am I right, or am I right?
I'd argue, unfortunately, you're wrong, although there's a grain of truth there. So the shifts in technology that have occurred over the last 5 years or so have enabled Tandem and other banks to bring a better product to market that appeals to customers and attracts large numbers of people into our business. And if it weren't for cloud, if it weren't for agile methodologies, if it weren't for some of the stuff that's going on with AI, we couldn't have done the stuff that we do today. However, the bit which I'll agree with is I don't think that our competitive advantage in anything beyond the shortest term is technology. So technology is highly replicable. And the other things you mentioned, culture, for example, is actually a much bigger barrier to entry. So, for example, if Rabobank wanted to build a Tandem, it would have to do it in a different building with different employees, and but could have the same technology stack.
And anyone wants to? Well, Ricky was very gentlemanly and said that I'm wrong, but in a nice way. So, anyone agrees with Ricky, or agrees a little more with me? Who wants to?
Yeah, maybe just because you mentioned Rabobank, I think you're pretty right. If, I think what I see at the bank ourselves, let's say we are able to be faster than ever before because of the new technology. So it's really helping us as an organization to be fast. But I agree with your statement. In the end, culture is way more important than the technology. As an example, we have gone through an agile transformation in a year within the bank. So 4,000 people are now working in agile. The impact of this is way bigger than the technology that is supporting us to go fast. But I fully agree with you. If we wanted to, let's say, build something new, a new venture, we have to go outside because the culture of this new venture is really different from the culture in the organization. But for us, the biggest change of us as an organization is not technology, it's culture.
Yeah, so from a technology provider perspective, we would concur. We would agree. We would say that technology is very rarely a unique differentiator. How you leverage it, and that comes back to culture and talent, may allow you to become differentiated, but technology per se, very, very rarely.
And Anish, maybe you're like taking a counterpoint because you're coming from a different market, and maybe they're like different drivers, and technology might be trumping everything else.
Yeah, so I came to the panel thinking that I can talk a lot more about technology, and now I'm actually realizing is that even I was actually in the last panel, we were talking about neobanks, but technically, they're not reinventing any new technology. It's all about like the packaging, the positioning, and it all comes to the culture. A few years back, I was in a conversation with one of the fintechs, and they were talking about a traditional bank launching a digital bank. They actually put up all these guys into a co-working space wearing T-shirts. But then when it comes to the compliance, the same old guy in the suits who was actually evaluating the compliance and the legal things. So I think culture plays a major role more than technology, because for most of when the digital banks or the neobanks so far, the technology is the same. It's about like the better user experiences or the better the positioning that we do. But the back-end technology remains I mean, it's different, but it's not that. Culture is more important than the technology.
And of course, you know, like saying the bank's future is kind of like a very, very difficult to unpack, right? You have all kinds of different banks, large, small, all kinds of different customers that they service, all kinds of different service providers. So there might be different futures to the extent that they would be at the futures. And maybe some futures have technology more front and center, and others have more, you know, customer service and culture and organization. Might it be the case for retail banks? Have more to do with the culture and some technology, and then corporates or banks that are in, you know, capital markets or asset management are more technology centric. And then again, what types of technologies are we discussing, or is it fairly monolithic?
So I can kick it off. So Bill Gates said in 1994, right? 1994, he said, banking is necessary, banks are not. So what we hope is that banks get back to the notion of providing a financial service and not obsessing about the product. When I go and meet a bank, I meet somebody who's the head of cards or the head of mortgages or the head of lending or the head of whatever it might be, but my customer journey is home buying. And Ricky, that's something I know you feel passionately about in terms of people who are in the gig economy. How do I get somebody onto the housing ladder, help them find the zip code where they can buy a home at a price they can afford with a mortgage that makes sense for their income profile, and not necessarily any one of those products came from the bank. They just assembled it to that journey, to that persona. So I think what I hope is that they get back to the financial service and away from this product mindset.
Are you getting back to the financial services through digitization?
No, I can only concur to what you just said. And as said, we have gone through the agile transformation with 4,000 people, and all those teams are now organized around customer journeys, not per se around products. Sometimes it still is because it's the start of a journey. But we look mainly at 35 main journeys that our clients have interaction with the bank through the app mainly. And I think what we see is it working well because you change from a product pushing organization through channels to really fixing issues that clients have through journeys. So I fully agree.
Do you find in your bank that you're not necessarily pushing your own product, but it could be somebody else's product as part of that journey?
Yeah, it's a very good question. So we are preparing ourselves at this moment to be able to do this. So we split the bank in platform and banking services. And the tribes that are working on platform are making sure that we are an open bank, and that we are able to offer services that are not mainly banking services, could be bookkeeping activities, could be something else. And this year you will see in our app services that are not per se banking services, but other stuff that we think is valuable for clients through API and an open banking setup. So it will come this year.
Yeah, I mean, it's an interesting one because there are certain areas where I do think the technology itself will transform the banking experience. So, you know, one of the challenges that certainly if you have the joy of ever going to an English bank, you will have experienced is, you know, the banks can no longer afford to provide, you know, one-to-one customer service. It doesn't work. The model doesn't add up. They're closing the branches. And when you go to my local branch in Camden, last time I went in, there were about 8 broken cash machines, a huge mob of people shouting at one poor security guard who was sitting there trying to, like, keep people away from the broken machines. And it was sort of a lovely little pastiche of the potential future. However, there are technologies like AI, which, you know, in and of themselves are going to transform the experience that we have of interacting with our bank. And I'd argue if used effectively are going to actually massively improve and extend the range of services that the bank can provide. So there are and you know, coming back to, I mean, obviously a bit hackneyed at Fintech conference, but blockchain and the change that it will precipitate, I have no doubt is going to change the way that banks behave and do their business in future.
Oh. Blockchain? Yeah. You use the word blockchain. Blockchain is going to change banks. Would you care to amend that statement, or are you doubling down on?
Well, yeah, it could replace banks in certain instances, but no. I think I genuinely think that as some of these technologies accelerate their adoption. So, for example, AI at Tandem, and you're going to come back to AI and away from blockchain.
Thank you.
But you know, when we use it to help customers actually make decisions, to help provide these services you're talking about over the top, to help figure out how much customers can afford to put aside at the end of the month, for example. But that is rapidly moving towards a position where, you know, essentially you could provide, if a customer wants it, you know, much fuller advisory services that really help manage all of their financial life. And that is a role that the bank can't provide without having one-on-one people to advise each individual today.
You wanted to say something?
Yeah, I agree with Ricky. 2 years back, if we really look at, I'm just talking more from the Asian markets, most of the fintechs which actually started the lending, they told like banks are not gonna issue like an instant credit line based on things like alternative scoring and all. But 1 year, if you look at like a 1 year back now, most of the Indian banks right now started actually offering like instant loans based on even alternative data scoring. Even they started doing instant onboarding. So technology can really transform a lot. Even coming to the customer support, like banks are slowly realizing that, okay, we can't actually put up a large call center, but we can actually use something like chatbots. And even the good part is that most of the banks which we have seen is like slowly moving to the cloud, which actually makes them more agile and to launch new services. So definitely technology is slowly transforming different aspects of banking.
It dawns on me that I needed to wordsmith that question. I still believe that technology is not going to change banks' future. There's like other drivers. And I hope by the end, when we take another vote, everyone is going to vote like me, right? But I do believe that technology can help financial institutions navigate and prosecute change. And maybe that's, you know, too pedant, or, you know, the semantics is too granular and too fine, but I see a drastic difference between we're doing better at navigating the change process with various tools, right? And building things maybe faster and building things better. But like the end result and the future, that's like a different ballpark. Am I on the right path here?
Yeah, maybe to comment on this one, maybe take a bit step back. If I look at, so I haven't seen too much technologies that are really going to fundamentally change the business model of banking. But it is fundamentally changing the operating model of banking. So if I look at our bank, so we started 120 years ago as small banks that were servicing farmers. And now we have 100 million transactions of our clients in the app. So the operating model has dramatically changed. Where I do see major impact on the industry is AI. Maybe a very simple example, and it's in the area of anti-money laundering and KYC. What we now see is by having proper data and really good algorithms, we are able to find fraud that we would otherwise never be able to find, just with manual human work. So I do think that specific societal issues like fraud, there you will see major change through AI. But also, like you said, on onboarding, we are able to do stuff that we were never able to do before. But fundamental business model change, I haven't seen too much so far. Operating model, yes. Yeah.
Anyone wants to rebound on that fine point between business model and operations?
I think it's an interesting one there because you know, I don't think it's obvious how the business model is going to shift in the medium to long term. But if you look at where a lot of the neobank business models are going today, they are moving towards capital-light activities. They're moving towards subscription. Not that banks have never charged subscription, many do, but they are moving towards platform. I have to say though, you know, I think the jury's still out on whether that is going to be a fundamental shift or whether the sort of 80-20 rule of 80% NIM and 20% everything else, which applies to almost all banks around the world in differing degrees, you know, could well end up being where we end up at the end of the day.
Yeah, just as a quick response, personally I love the neobanks because they bring competition, so it's good for our banks that we stay sharp towards our customers. In the end, so far I haven't seen too much fundamental change in how the neobanks build the new business. It could be that it's going to change, because in the end we will also go to subscription fees, and so very comparable to the neobanks. So I like the challenge of the neobanks, but indeed I also don't know for sure where it's going to end eventually. Yeah.
I believe technology has also changing business models as well for financial institutions. So typically traditional banks used to offer transactional banking services where you used to charge a lump sum fee, and now they're actually creating their own developer portal and saying the corporates, you actually come and take my APIs, I charge a subscription model. Or when it comes to models like pay later models, banks never used to have a pay later product. We have actually seen now banks actually launching that. So I believe banks are also looking at how fintechs are actually building, and some of the business models actually are transforming, and through technology they're creating new business models as well. But I agree, like most of the 80% still remains the same from a business model perspective.
I'm going to put you in the hot seat. Are you ready?
I'm ready.
All right. So you're a technology services provider to banks, right? Through the platform that you've built and the services and the products. You have a couple of potential clients here. What would be your pitch? You know, use Finastra and you'll be able to change, but what? So this is a live pitch.
Sure. So I won't pitch Finastra per se, but I'll engage in the dialogue. So using the language that Bart introduced of operating model and business model, we would use the same. So when we talk to customers about operating model, all of our conversations boil down to 4 things on the operating model side. It always boils down to growth, cost, risk, or engagement. Always. It's always one of those 4 things, and the only thing that changes is the order of those 4 things. When we switch to business model discussion, which is beginning, to Bart's point, it is beginning, and to your point, then it starts to open up questions about how you think about banking. So why don't I distribute the mortgages of others, or why don't I distribute my mortgages through others? Why don't I think about business motions like Ping in China, or Greater China, where I'm offering insurance or life care or other products, other services as part of that customer journey. So it really is beginning as people move from digitize to digitalize, and they're looking at business processes that go beyond their 4 walls. So there's an operating model conversation for sure around those 4 things, and then there's a business model conversation where I think Asia is really leading. Okay, so I take that at the face value. So 100% of the banks that you sell to, or anyone sells to, or 100% of the banks out there are probably ready for an operation model discussion. Make me better, faster, better looking, everything, right? So how do you find those banks that are ready for the business model transformation? And what are the telltale signs? Is Rabo ready? So from a provider perspective, and then we'll go to a bank perspective maybe, there are hotspots. The hotspots, starting at the board level and then coming down. The hotspot number 1 is return on equity. Right? Typically, many institutions, particularly here in Europe, have a return on equity which is below their cost of equity. This is not good. So that's the number 1 conversation in the boardroom. The second conversation, which is a derivative of that, is the cost-to-income ratio. If you have a cost-to-income ratio which is in the 60s or 70s, you are in a lot of pain, and you're going to have to confront that. The third is, you mentioned the net interest margin. right? Net interest margin has been compressed for a long, long, long time. And that's highlighting need for growth and need for cost in the context of risk, but always back to Anish, your point, which is delighting people through the engagement. So it's a cascade from ROE, cost to income, and then finding new sources of growth at lower cost.
Are the potential customers convinced?
I think all the things that you say are right, but maybe to elaborate a bit on this, indeed, cost-to-income ratio, low cost, we all have to go there as banks because that's the game these days with low interest rates. For me, in the beginning, in the introduction, you were talking about opportunities that would also be there for us as incumbent banks around platformication. I think that's a very interesting one. There, I do see for us new opportunities to create new business models that are very different from what we are doing today. So that would be my main interesting angle. Because there I do see opportunities.
So more in the business model than the operating model?
As far as platforms?
And then the question for me is, where do you go to buy that? Because if I'm going to be a bit provocative for a moment, with apologies, because I don't know Finastra's platform. So, but my experience of what's out there is actually it's generally 10 years old, sometimes 20 years old, and generally not. If you want new stuff, you've got to build it. And presumably, your agile teams aren't just sitting there installing someone else's software; they're actually coding software. And you have to, actually at this point in the cycle, build it to innovate. And there are some bits that are falling into place. Some of the people who are exhibiting here and some of the software systems are making it easier, providing chunks of that. But actually, these new business models, as we sort of explore them, I think need to be built. It's unusual that a software supplier would go to the risk of kind of building that new business model before it had been discovered. They tend to come along afterwards.
I think banks are finding now innovative ways to work around some of the challenges. For example, there is a lot of these legacy core banking systems where you have these challenges on building new services or applications. I had seen banks actually finding workarounds, basically, even creating like creative ways in which to expose their APIs to fintechs. The other part I have seen in the last 2 years dramatically is that earlier there was only few banks which is actually offered as a platform as a service. Even in a market like in India where there is no regulation of an open banking, but I have 15 banks which have a P&L unit which is actually now working with different vendors to actually create a platform as a service model.
You wanted to rebound on Ricky.
Well, actually, to concur with Ricky. So, Ricky, I believe, I'm with you, right? So I believe the past, we've always constructed this argument, which I think is a fallacy, about build versus buy. And now you have the opportunity to do both. So if I look at what we do, the first thing we have to do in the morning is look in the mirror of honesty and say to ourselves, 95% of all innovation does not come from us. It just simply doesn't. So what we should think about is how do we do what you described, Anish, which is open up all of those core workflows, which are non-differentiated, to the world's fintechs. So for example, the software that does facial recognition, we don't write it, we consume it. KYC, sanction screening, online signature, cognitive computing, OCR, NLP, we just consume it. So what we've worked out is where to play and where to enable. So now you can buy and build, and I think that's the major difference.
Just maybe to respond on this, because the assumption is that, and I think you hear a lot from the banks, that they are going to become the platform. I think also that's a misconception. We also think we have an opportunity in the Netherlands to become a platform because we have 100 million visits in the app every month. So that's really a nice platform to do business on. But what we also see specifically internationally in the food and agri space, and some of my colleagues are here in the room, is that there will be other platforms of other players where we can potentially be successful with banking services. So we've invested, for example, in India in AgroStar. It's a platform for farmers that generates data. This data could potentially be valuable for us because if we run an algorithm on it, we can potentially assess the credit quality of those farmers and bank in the market that you would never be able to bank in. So those platforms will arise, and we don't have to be always the owner of the platform, but if we are able to be the player on those platforms with services and knowledge, I think we have an opportunity to create new business.
I'm always fascinated by that narrative around platforms and platform bankings or banks as a platform. In as much as, to me, the prerequisite to become a platform is to present in a programmatic fashion data from point A to point B, or from one person to another, or from one group to another, right? There's the famous, I don't know if people in the audience know, but some time ago, I think it's like 10 years, let's say, Jeff Bezos wrote a memo to the entire Amazon staff and said, from now on, you will present data programmatically. I don't care with what language. Any person that does not present data programmatically, i.e. through APIs, will be fired. I'm adding that last point, but I think he probably thought it if he didn't write it, right? And so my question is from a transformation point of view, right? Especially with technologies that allow that. How can that ever be feasible in banking, given that there are all kinds of frictions and constraints that are there, compliance, regulatory, and so on and so forth, where it's very difficult to take out the human being and the manual aspect. Can banking really transform itself in one of those futures and be a platform like a pure technology company? I'm quite skeptical, actually.
Maybe ask the others first.
So I'll take it. So what we have learned is that no matter how big the bank is, it still has the economy of scale of one. Now, when you think about what you can see across all banks, back to your point of data, if I have the data of one bank, Rabobank, that's great. 100 million people, 100 million transactions in the application, wonderful. But if I aggregate that data across 1,000 institutions and I apply AI or BI to that, then all of a sudden my insight and my capability becomes much higher. Here's a concrete example about growth, right? If we have 1,400 institutions who use our mortgage solution, if I aggregate their data and I apply AI to that data, I can help all of them improve their conversion rates and their win cycles and their probability to convert based on that aggregate data. They don't necessarily compete with each other because they're community banks around the United States. But that's an example of your point, which is bring me structured data, your inferred point, which is share that data, anonymized, obfuscated, and thirdly, apply capabilities to it so we can improve our business experience and growth.
I think this was my first point. Apart from technology, culture and people actually really matters because every bank now has APIs, but for example, for a fintech or a startup to integrate with that, it takes 9 months, compliance, approvals, whereas banking as a service or a third-party fintech would actually expose their APIs and within a day, somebody can actually integrate. That's because the banks doesn't have a product manager who probably understands the needs of how these APIs need to be created or to be consumed. So I believe 90% of the, I may be wrong, all statistics are made instantly, mainstream larger banks would actually fail in creating this platform as a business model. Where we have seen is like whether it's in the US or in the Europe or even in Asia, is that the small banks, which are actually niche, nimble banks, which has got selected the right set of the people, build the right cultural mindset for programming APIs or like creating an API-led or a platform-led business model that will actually win the market.
This might be a very unfair question to you, but I'm still asking it. So to Simon's point, would Rabo participate actively and be happy with this model where not only they are going to profit, but also ING and ABN AMRO, their direct competitors? Or is it very difficult for banks to participate in that way?
Can you rephrase the question so that I really
Simon had like aggregation of the data, and the more the data we have across banks that participate, the more each of the banks are going to profit, right? I mean, I'm paraphrasing.
Yeah. The interesting thing you make, just as a lead to what I know you're going to say, which is the data can be aggregated with non-banks. So, for example, in an agricultural bank, you can aggregate with Monsanto and Caterpillar. And then all of a sudden, it's a completely different service you provide.
It's an extremely unfair question for you, so.
I don't think I fully understand the question.
Well, there's like a data, as a core common utility, and you're going to pool and share your data. And the more data you pool and share, the more you're going to profit from the insights, but also your direct competitors, because they're participating in the same scheme. That's like a level of collaboration to get to like a new business model that banks may not be ready to. Oh, I don't know. Maybe you give that example because you're selling this.
I think it depends very much the activity where you do the data sharing. I see huge opportunities in data sharing if you look at AML and KYC. And I think in the end that's going to be for fraud. So I think it's going to be in the end in every country kind of a utility that's being serviced for all players in the market, because you should not compete on this, I think. You should just fix the issue. If it's on mortgages, in general, we as banks, let's say, should be humble enough to not think that we're the center of the universe. And yes, we will try to be a platform with our app because we have so many visits, but I also know that there will be lots of places where our clients are where we are not the leading player. But at least what I want to make sure is that we are there as a bank. So we're going to look way more at banking as a service that you plug into other platforms. So if it would be a platform where clients would come to look for a mortgage, for example, and we are just one of the suppliers on this platform, totally open for it. Yeah.
Maybe there's a cultural, maybe a Dutch bank is going to say yes, but if I had a French bank here, they'd have a very tough time saying yes. I don't know. But maybe like a younger bank probably is going to take that bet all day long.
Look, no, definitely. I mean, in so much as, I think most of the neobanks are sort of open, closed platforms. Now, they are aiming to be the platform. So Tandem sells other people's products already, and we look to assist customers with areas of their lives that we don't offer products at all. So, I mean, it's... however, I suppose the question is, would we cooperate with our direct competitors in a common platform? I think, to some degree, that's happening already. I mean, for example, Tandem uses open banking to allow you to aggregate your Monzo data into your Tandem platform, and in essence, to use your Monzo debit card and your Tandem credit card for different functionalities in your life and control it all from your Tandem app. So
fair enough.
We kind of already are at some level, although I think there's a suggestion in what you were saying that maybe even sharing that data even more broadly and widely beyond, beyond a couple of businesses is looking grumpy. Can everyone shut the door, please?
Yeah.
I think the future of banking is what you are describing. If I look forward and look at the Rabobank app, so we have ING in the app, we have ABN in the app, it's already there. Will we also sell mortgages in the future to our clients, which sometimes is ABN and ING? Of course, I think it's going to move there. All financial products have moved into open platforms and open architecture. Also in mortgages, I think it's going to happen.
In fact, the whole tagline of our company is the future of finance is open. Open architecture, open APIs, open ecosystems, open innovation, open source, open standards, you name it.
Can the future of banking be borderless? Define borderless any which way that...
Can't be borderless, because you've got regulators who operate within borders. In Europe, I mean, there's some interesting stuff happening in Europe, and what deposit solutions are trying to do this morning are obviously allowing people to move deposits around between different countries in the Eurozone, which is nice and easy if you've all got one currency, but it's happened remarkably little. And actually, when you look at, the globalizing banks, actually very few... in fact, I can't think of one bank that's actually, neobank, that's actually taken banking licenses in 17 countries. It doesn't exist. Revolut has one banking license, is going for, I think, another one in the UK, but ultimately operates without a banking license in most countries. N26, although they had a banking license in Germany, obviously have spread out around the world without banking licenses quite specifically. So, I think the challenge is regulators and licenses. It makes it really hard. And maybe even take 10s or 20s of years to be borderless.
Mm-hmm.
I think I agree with Ricky, but I feel that some of those fintechs will actually figure out ways in which, within the constraints of regulatory challenges, like the way like an N26 or others has actually done, maybe they partner with the banking as a BaaS providers in each of these regions and build the top layer onto it. But I think definitely the future of banking is like borderless. Right now, probably only the few FX conversion or like the cross-border payment companies are actually driving the initial thing, but you will see more and more banking services which will actually having cross-border accounts. In fact, today I met a few of the startups, which is a neobank based in Hong Kong. They're actually helping companies in Europe to actually set up a company online in Hong Kong and get a business checking account to do trade with China, basically. So a lot of interesting models are actually coming up in this space.
Yeah, so one vote for borderless, one vote against. Are you breaking the tie, or?
I think it's getting easier. So I think it is still a very difficult game to play. But if I look at our own ventures, so for example, Peaks, which we launched about 2 years ago, which is robo-advice for millennials. We are now launching in Germany. It's maybe a stupid story, but I was with the team, so I asked them, so where are you going to set up your head office then in Germany? And they said, what do you mean head office? We're here in Amsterdam. We're going to hire 3 people who speak German for the call center, and they can really go in Germany. So it has become easier, I think, to launch those business models across Europe. But if you're really going to core banking, it's, let's say with the regulation, it's not very easy, I think.
Yeah, so I'm also a little bit skeptical. You know, the curious thing about globalization is we now have more countries than when we started, and we have more regulators than when we started. So like you, I think there'll be supranational initiatives around KYC and AML and access to deposits across countries. But as Ricky said, I think the borders will stay for a while. We can solve global problems or super-regional problems, but we'll have to come top-down. KYC, AML, authentication, those kind of things.
Fair enough. All right, we have 5-6 minutes left. I'd love to get the questions from the audience if we haven't bored you to death and you're all sleeping. I hope that there's still a pulse in life. Anyone? Anyone? This gentleman in the middle over there. Raise your hand so the microphone comes to you. All right.
Thank you, guys. You talked about the implication of shared data and open platforms and really like a almost collaborative ecosystem. What defines the winners in a system like that, and why?
Well, I think there can be different winners in a system like that, and I think it's understanding your role within the system. So obviously, I think there's a lot of focus from all banks, both neo and existing, on actually owning the customer interface, and so some people would define that as winning. But I would argue that for some of the older, larger banks, actually there are a sort of almost a manufacturing role, which they're used to, is actually the appropriate strategic response to a platform situation, because they will be able to manufacture products more effectively that can then supply the platforms that other people are operating. Because if you're honest, those organizations just aren't really designed to serve and own customers.
All right, another question. Don't be shy. No one. All right. I have more questions then. Now I'm blanking. I had a question. And
Can I ask you a question?
No. There's like there we go. The young lady saving me.
Save you. I guess it's really interesting, in terms of banks digitizing, and it's really a cultural, not a technology. We've seen in Australasia certainly both models where they go, okay, we're going to innovate and we're going to set up this hub or innovation center over here, and that's going to have all the new technology and culture, and that's all wonderful. But how do you integrate that? So what is the model? Because when you isolate it, then you don't actually innovate the bank, because it's the isolated new little part of the bank. So I guess, what is your answer? Are you just going to do the cannibalization and set up the separate brand, or are you going to try and integrate?
I think it's a question for me, right? Yeah, so it's a very good question. So what we have done is, so first of all, I talked about let's say the agile transformation. That's really to fix the bank of today and tomorrow, to really make the bank more digital, super customer focused, in tribes and squads. And there we improve, I would say, the app for today and tomorrow. But we also do innovation projects that are really further away from the core of our activities. And what we there do, and I just mentioned Peaks, is there we do the development really outside of the company. So, and if we see that the venture has the ability to really, let's say, stand alone and become profitable alone, we try to keep it as far as we can from the bank, because otherwise we cuddle it to death. But we also develop new technology, for example, so digital lending based on machine learning we have developed. But we have developed it outside of the bank with a tech player, but we're going to bring it back to the core of the organization. So, but also this one we did outside of the organization to go fast, but already with also the architecture in mind that it's going to be brought back to the organization. So if we want to go fast, we go outside of the bank. But we also, let's say the whole agile transformation is also to make the bank in total faster. But real disruptive innovation outside of the bank.
Anyone else? Ricky, you want to say something?
Yeah, no, it was just, I think the answer is definitely don't. CYGB in the UK recently bought B, its sort of new, not so agile offshoot, back into the fold, and I think it's completely died. But I think, and I actually think they're two different objectives, and I think it's quite good the way you're thinking about it, Benoit, because actually, sorry, Bart, apologies to my is that the transformation of your organization isn't the job of your fintech innovations. The transformation of the inside of the organization is something that needs to be its own project and requires a very, very different set of skills and an application. So let those babies fly. I
remembered my question. I'd love for each one of you to answer it. So here's the question. what is the one technology that has had the most impact on banks and will continue to do so in the foreseeable future? You can only choose one. You can't have like, oh, this and that and that. Who wants to start us?
Yeah, it's boring, but I'm going to jump in with AI. And has is a bit marginal, because for most banks, it is just in its infancy. So, for most banks, this is, I was running a logistical regression model, and I've now made it a little bit less logistical regression, and I'm using some AI models to do exactly what I did before. But that's the answer.
All right?
AI.
Because they're boring.
AI big time.
Oh my gosh. Simon, be very careful with what you say.
A.I.
Pascal, do you have an answer? Yes. Thank you for asking me. Cloud computing. Way, way above artificial intelligence.
Historical, if you said historical.
No, and going forward too. Yeah, same. All right, we're done.
Thank you very much,
Thank you,
guys.
everyone.
Thank you very much.
Thank you.